On March 9th, 2026, 2 days ago, something happened that has never happened before in the history of money. The Bitcoin network mined its 20 millionth coin. At block height 939,999, the Foundry USA mining pool added a block to the Bitcoin blockchain and crossed one of the most significant thresholds in the 17-year history of this asset. 95.24% of all the Bitcoin that will ever exist in the entire history of this planet is now in circulation. 1 million coins remain, and those 1 million coins will take 114 years to mine. The last Bitcoin will not be produced until the year 2140. You are alive at the exact moment the scarcity era of Bitcoin has officially begun. And most people have absolutely no idea what that means for the price of the Bitcoin they own, or the Bitcoin they have not yet bought. Let me put the supply math in terms that make the scarcity impossible to ignore. 20 million Bitcoin have been mined in 17 years. The next 1 million Bitcoin will take 114 years. That is not a typo. The pace of new supply has slowed so dramatically due to the halving mechanism that what took 17 years to produce the first time will now take 6.5 times longer to complete. Right now, approximately 450 new Bitcoin are mined every single day. By 2028, after the next halving, that drops to 225 Bitcoin per day. The day is coming, within our lifetimes, when the entire global Bitcoin mining industry produces less than 100 coins per day, and then less than 50, and then less than 25, until the year 2140, when the last fraction of a Bitcoin is mined and new supply ends completely and permanently forever. Now here is the number that changes everything when you understand it correctly. Between 2.3 and 3.7 million Bitcoin are permanently lost, gone, forever, forgotten wallet passwords, dead hard drives from 2009 through 2012, early adopters who mined thousands of coins and then lost access. These Bitcoin exist on the blockchain but can never be moved, which means the real effective circulating supply of Bitcoin, the coins that can actually be bought, sold, and transferred, is closer to 16 to 17.7 million coins, not 20 million. And now consider who is holding that 16 to 17 million coin effective supply. The United States Strategic Bitcoin Reserve holds 328,372 Bitcoin. Strategy, Michael Saylor's company, holds 738,731 Bitcoin. Spot Bitcoin ETFs collectively hold 1.26 million Bitcoin combined. The U.S. government, a single public company, and the ETF complex alone are holding nearly 11% of all Bitcoin ever mined in long-term custodial storage. That Bitcoin is not for sale. It is not available on exchanges. It has been removed from the tradable supply permanently or semi-permanently. And this is happening at the exact moment the last 1 million Bitcoin begins its 114-year slow drip into circulation. The CEO of Bitcoin mining company Electron Energy said it best. Having only 1 million Bitcoin left to be mined is a powerful reminder of something unique. This is the first monetary system in history with a fully predictable policy written in code. Think about what that means. The Federal Reserve can print $1 trillion in a single afternoon if it decides to. The European Central Bank can expand its balance sheet by any amount it chooses. Every fiat currency in human history has been subject to the decisions of governments and central banks who always, ultimately chose to print more. Bitcoin cannot do that. It is mathematically impossible. The code is set. The supply is fixed. And as of March 9th, 2026, the scarcity era has officially begun. Now let me tell you about the real Bitcoin supply situation that almost nobody is talking about correctly. The exchange whale ratio, which measures the proportion of large whale transactions relative to total exchange inflows, surged to 0.85 in late February, the highest reading since October 2015, before beginning to pull back. Analysts consistently associate this pattern with selling exhaustion, the signal that the large sellers who were going to sell have already sold. On-chain data confirms that wallets holding between 100 and 1,000 Bitcoin, classified as shark wallets, have grown to nearly 17,970 addresses as of early March 2026. These are not retail investors. These are mid-sized institutional and high-net-worth individual buyers systematically accumulating Bitcoin at these price levels. and U.S. spot Bitcoin ETFs recorded approximately $1.45 billion in net inflows over 5 trading days in early March, with no single ETF posting net redemptions on March 2nd, ending a weeks-long Monday outflow streak that had been a persistent concern for Bitcoin bulls. The Kraken chief economist made an observation that perfectly captures what the 20 million milestone means for institutional investors. With supply now effectively fixed for all practical purposes, the narrative of Bitcoin as digital gold has transitioned from a theoretical concept to an empirical reality. That sentence is important. For years, critics dismissed Bitcoin scarcity as theoretical, as a feature that sounded good on paper but had not yet been fully tested by institutional adoption at scale. Today, with 328,000 Bitcoin in the U.S. Strategic Reserve, 738,000 Bitcoin in Strategy's treasury, 1.26 million Bitcoin locked in ETF custody, and 3.7 million Bitcoin permanently lost forever, the scarcity is no longer theoretical. It is mathematical, documented, and accelerating. The window for accumulation at anything below the all-time high is a window that has historically only remained open for a limited period before institutional demand overwhelms available supply and price discovers a new equilibrium significantly higher. Let me now connect the 20 million milestone to the most important near-term price catalyst, the FOMC meeting on March 18th. 7 days from today, Jerome Powell will hold a press conference after the Federal Reserve's interest rate decision. The rate hold is nearly certain, 95.5% probability according to CME FedWatch. But the rate decision is not the trade. The trade is Powell's language. In 2025, Bitcoin dropped after 7 of 8 FOMC meetings regardless of the actual decision, purely because of sell the news positioning. That pattern is critical to understand. The market tends to price in anticipated macro events in advance, meaning Bitcoin often rallies into FOMC and sells off immediately after, before recovering as the actual implications of Powell's words become clear over the following days. January 2026 demonstrated this perfectly. Bitcoin fell from $90,400 to $83,383 in 48 hours after a hold that was universally expected. But the recovery from that drop, once the dust settled, was significant. There are 3 FOMC scenarios that matter for Bitcoin specifically. Scenario 1, the dovish shift. Powell acknowledges the 92,000 jobs lost in February, mentions that economic conditions could warrant rate cuts in coming meetings, and signals a more accommodative posture for the second half of 2026. In this scenario, Bitcoin could potentially break above $73,300 and begin a sustained move toward the $75,000 to $81,000 target range within days. Scenario 2, the neutral hold. Powell holds rates, delivers balanced language that neither signals urgency to cut nor urgency to hold, and markets interpret his words as neither hawkish nor dovish. In this scenario, Bitcoin likely stays range-bound between $66,000 and $70,000 while the market waits for more clarity. Scenario 3, the hawkish surprise. Powell dismisses the February jobs data, emphasizes that inflation at 2.8% remains above target, and signals no rate cuts until at minimum the end of 2026. In this scenario, Bitcoin could retest $65,000 immediately, and the head and shoulders downside projection to $59,500 becomes a real risk. Here is what the supply math tells you about which of those scenarios matters most for long-term Bitcoin holders. The 20 million milestone changes the fundamental supply and demand equation regardless of what Powell says on March 18th. The FOMC meeting can shift Bitcoin's price in the short term, up 10% or down 15%, but it cannot change the fact that 95% of all Bitcoin is already mined. It cannot change the fact that between 2.3 and 3.7 million of those coins are permanently lost. It cannot change the fact that the US government, Strategy, and spot ETFs are holding 11% of all mined supply in long-term custody. And it cannot change the fact that the remaining 1 million Bitcoin will take 114 years to produce. Short-term volatility around FOMC is a feature of this asset, not a change in its fundamental value proposition. Here is the framework for each type of investor watching right now. If you are a long-term Bitcoin holder who has been through the drawdown from $126,000 to $65,000, today is the day the scarcity argument you believed in when you bought Bitcoin has been mathematically confirmed at the highest level in the asset's history. 95% mined, 3.7 million lost, 11% locked in institutional custody, 1 million left over 114 years. The thesis you invested in is intact. Watch $66,900 as your critical support level. Above it, you are positioned correctly for what the supply math suggests comes next. If you are a newer investor who entered through ETFs, understand that your ETF purchase is part of a structure that is now collectively holding 1.26 million Bitcoin in long-term custody. The institution that sold you that ETF share is not selling Bitcoin when the market drops. They are holding. Their mandate is long-term custody on behalf of their investors. You are co-invested in a structure that is systematically removing Bitcoin from the tradable supply. At the exact moment the last 1 million coins begins its 114-year journey into circulation. That is not a coincidence. That is the most powerful supply and demand setup this asset has ever produced. If you are on the sidelines, here is the question the 20 million milestone forces you to answer. At what price point and at what supply availability level will you feel comfortable buying Bitcoin? If the answer is when there is more supply available, you have misunderstood what makes Bitcoin valuable. The supply will never be more available than it is today. Every day going forward, more institutional custody, more lost coins, more ETF lockup, more strategic reserve accumulation. The window is not closing in a single day, but it is measurably narrowing every single day. The 20 million milestone is not a price prediction. It is a supply statement. And supply statements of this magnitude are worth understanding before the market fully prices them in. 7 days to FOMC. 1 million Bitcoin left. 95% mined. The scarcity era has officially begun. Make sure you understand what that means before March 18th arrives. Subscribe right now and hit the notification bell immediately. 7 days from today, this channel goes live the moment Powell speaks with a complete real-time breakdown of every word, every implication, and every price level to watch. You cannot afford to see that video hours late. Turn on notifications now. Drop one word in the comments. Bull or bear? Where does Bitcoin go after March 18th? And share this video with every Bitcoin holder you know today. The 20 millionth coin has been mined. The clock on the last million has started. Make sure you are on the right side when history finishes writing this chapter.